Well, let me get started. So just a little bit of housekeeping. Again, this is being recorded, so if you want to catch it later or replay, or if you have to drop off early, that's not a problem. Second, if you have a question, you could submit your question at any time. Just click on the Q&A box on your app or on your computer. Pretty straightforward. Just submit the question, and then I'll just get to it here in a bit. Thirdly, in case you're wondering what the topic is today, my marketing team sometimes picks the topics and then tells me at the last minute, or without a lot of warning, what it is. And I don't blame them. It's fine. But today is about investing in Broadway. What is Broadway like as an investment? And also what is my, I hate to say background, because I don't actually have a background in theatrical productions or Broadway, but how did I get involved in Broadway musicals and Broadway investing shows and whatnot? So I'll talk a little bit about the history of it, and then I'll talk about why you can get involved, or I can get involved, or many people can get involved in investing in theatrical productions. It doesn't have to be Broadway. It could be on the West End in London. It could be in Canada. It could be in Australia. It's wherever it may be. It's an interesting type of investment, and it's not what most people think it is. It took me a while to actually wrap my head around it. So I'll talk a little bit about that. And I actually don't think we're going to go a full hour today. So, if we go for 30, 40, 45 minutes, whatever it is, we'll just go as long as we have questions, and I'll just cover the bullet points that I kind of scripted out. I don't think I'm missing out on anything. Nate is usually on with me. Nate is not on here today. I'm going to be doing some of these on my own solo monologue. Let him focus on working with investors and raising capital and all that good stuff. And that's actually the last thing is I will talk a little bit about our investment fund and the opportunity there and the potential opportunity for you if you qualify, and the rates of returns as far as what we're offering. So with that, I'm going to leave the Q&A box closed, but again, submit anytime. So let me jump in. I'm kind of titling this, or actually I should say my marketing team is titling this webinar, The Profitable World of Broadway Investments. And it is true. Broadway investing can be very profitable, but it is also, for those in the know, a very high risk venture, an alternative investment. One of my friends and mentors, Ken Davenport, told me one day, he said, out of 10 productions, about 7 of them will not recoup your original investment, the principal amount that you put in. 2 of those productions will recoup and maybe make a profit. 1 of the 10 will be a home run. It'll be like hitting an absolute home run, to use a baseball analogy, and can crush it for years to come. And if you look at this from a venture capital perspective, a VC perspective, a VC will invest in 10 businesses knowing that one of those businesses will succeed and crush it and make up for the loss or losses on all the other investments they've made, the other businesses that have failed or struggled and just never really generated a profit. So they know going in that there's going to be failure, but they also know that they're going to have successes along the way. And investing on Broadway is not the same thing, but it's similar in that sense. So I knew that going in early on in working with Ken. So, and that's kind of the approach why we are invested or vested in over 10 productions. I think it's close to 14 actually. I have the list on a different screen, but I will go over some of them. So let me begin by telling you how I kind of fell into Broadway and Broadway investing. I could go all the way back to many, many years ago, and we'll call it decades ago. I'm not going to do that. But I will say that the first real theatrical production I saw was before I got married. It was Phantom of the Opera. My girlfriend at the time took me to, as a gift, I guess, or a present for some event or occasion, to go see Phantom. She liked theater and she liked Phantom. I never saw it. When I saw it, I was wowed. I was taken back. I was impressed. I fell in love. And I think that love and passion was already in me. It just needed a certain catalyst or trigger to bring it out. And ever since then, I was basically hooked on theater. When I had my daughter, almost 17 years ago, um, she immediately fell into dance, theater, singing, and whatnot. And so it kind of, I didn't push her in that direction. It was just something that she took to, and we just let her go through, one studio after another. And she's still to this day, as a 17-year-old, still in performing arts. So it kind of runs in the family in a sense, but it wasn't ever pushed upon her. But I met this guy, Ken Davenport, at a mastermind. And you guys know I'm a huge proponent of masterminds. In fact, we run two major masterminds, which makes up a very significant portion of our investment fund. The Money is Mastermind and the Level Up Real Estate Mastermind. And actually, those are going on starting tomorrow in Salt Lake City, back to back. So for those of you who are members or are going to be in Salt Lake, enjoy the event. But I was in a mastermind called War Room at the time, and I was sitting next to this guy. I didn't know who he was. This is many years ago. And we just got talking about business and marketing and whatever else. And I told him what I do and the real estate side of things with the turnkey real estate investments. And he was intrigued. He had questions. He wanted to learn more. He basically said, "Where were you like 5 years ago when I needed you and wanted you?" Well, here I am today. So, we've been talking real estate on and off. And then I asked him what he did and whatnot. And he started telling me a little bit about, him being a lead producer on Broadway productions. He rattled off many of them. Some of them you might be familiar with, like Kinky Boots. Um, and then he told me, well, I've been also what's the title? The executive director for North America for Andrew Lloyd Webber, which is like, wow, that's pretty impressive. So he's basically Andrew Lloyd Webber's right-hand man for North America, overseeing all the productions that Andrew Lloyd Webber put on, from Phantom of the Opera to Jesus Christ Superstar to Cats and whatnot. So, extremely famous person in the theatrical world. He stopped doing that after about 4 or 5 years. It just was too much, and there were other reasons. But he he impressed me, and I was asking him questions about it. So then he started telling me about some works that he had in early stages. He wasn't raising capital; he was still very early on. But I was picking his brain, and we started to form a bond and then a friendship, and we stayed in touch. And he told me about one particular production that was based on National Lampoon's Vacation movie franchise with Chevy Chase. As you know, there was probably 4 of those movies, and he basically got the rights from Warner Brothers to produce Vacation as a Broadway production, aptly titled Broadway Vacation. It's actually called The Griswolds Broadway Vacation. So I told him, I said, "Oh, that's very interesting. It's cool, and I think I'd like to, maybe ride along with you on that in some way, shape, or form." And obviously that meant as being an investor. So what I planted as a seed back then over time grew as our relationship and our bond and just getting to know him grew over time. And so it got to the point where I did make that leap and made a personal investment into Broadway Vacation. It's ready to go prime time. It's not live yet. We haven't had our opening night. We're still talking about the right launch date, whether it's this year or early next year. It'll probably be early next year. We got to lock down the right theater. But that was kind of like my venture into Broadway and Broadway investing. So that just was the seed that started getting me involved in other productions, such as A Beautiful Noise with Neil Diamond, the Neil Diamond musical, which is still running today, but will be closing at the end of the month. So if you haven't caught it and you're in New York or in that area, you have until June 30th to catch A Beautiful Noise. I believe it's at the Broadhurst Theater, so definitely worth checking out. But yeah, I just started to learn and educate myself about Broadway and theatrical productions and how they worked. It was very difficult for me coming from a real estate space to understand how Broadway productions are valued and how you generate a return. The whole idea, to just give you a quick summary of how that works in general, there are some complexities and nuances to it, but in very, very general terms, you want to, first of all, recoup your principal investment. So the production is capitalized. They might raise 10, 15, 20 million dollars, sometimes more if it's a very extravagant production. Then it becomes sorry, there's a Zoom notification going on here. I'm going to have to just say no to that. Sorry about that interruption. That was weird. I've never seen Zoom do that to me before. um, so, um, so the first goal in investing with a Broadway production is to recoup your investment. You want to make your principal back, and that is really the first goal for the lead producers and the executive producers, to return the capital to all the producers, co-producers, and investors. After that, then depending on the level of investment that you get into, you will receive a certain rate of return from that production, which is usually a prorated share of the distributable profit from that production. On top of that, there's often sweeteners that you will participate in, that you share with the lead producers. So the lead producers have one pile or bucket of revenue, and the co-producers and the investors share from another. And usually the revenues or the profits that are generated from that production are typically split between those two buckets. It may be 50-50, but on top of that, the producers, the lead producers, will share as the general partners in that production a piece of their pie back with the co-producers, and they call that a 1-to-1, a 2-to-1, a 3-to-1, a 4-to-1, a 5-to-1 payout. And that just means that for every dollar you invest, there might be, let's say, for every $3 you invest on a 3-to-1 investment, you might get $1 for every $3 you invest, which is automatically a 33% increase or bump in your rate of return. So those are very, very attractive, but usually those are reserved for investors that are coming in at larger dollar amounts and as co-producers, which go hand in hand. They're typically, synonymous and tied together. So there are other nuances to it, but that's generally speaking what happens is you invest, you recoup your initial investment, the principal, and then beyond that, you get a prorated share of the profits on whatever it is, a quarterly basis or whatever threshold there is, for a almost an indefinite period of time, meaning that as long as the show is running and generating a profit, you will share in that profit. So it's not like real estate that there's cash flow from day one. It's really more about the recoupment of your principal or the capital, followed by distributions for as long as the show's running, whether it be on Broadway or a regional theater or another city or a touring show, which is another way to generate revenue from a production. And I'll get into that in a moment here. So that's basically how I fell into the whole Broadway theatrical thing. And after I started making investments personally into it, I realized that this would not only be a good diversification for Norada Capital to diversify its portfolio, meaning the foundation of business assets that it has as the assets under management within Norada Capital, but it also allows me to get deeper into other lead producers and executive producer circles to have early access to new productions as they come along. And so that's actually paid off, because I've been privy to and given access to many productions that I never would have known about, let alone had access to. So it's really paid off to be able to actually just ingrain myself in that community and getting to know other co-producers and other lead producers and well-known names in that community in the theatrical space. So, when I asked the question, why invest in theater? One, obviously, is the love for performing arts. A lot of people just like to support the arts, and they invest not so much because they're looking for a return on their investment, but a lot of people actually do that for that specific reason. But they also come from a theatrical background, or they're a musician, or they are involved in performing arts, or maybe their family is involved in performing arts, and so they want to continue to support. So they'll find something that they like and enjoy and want to be a part of and invest in. And so it's really the love of performing arts. But the other reason, and this is obviously what's driving me, at least financially speaking, is the high potential returns. Now, I've heard different statistics out there. I told you what Ken Davenport told me about, 7 productions not recouping the original investment, 2 of them recouping and making something, a return, some money, and then 1 of those 10 knocking it out of the park, like a Lion King, like a Hamilton, like a Wicked. The list goes on. So when you get involved or invest in one of those, it can be extremely lucrative, and it could be an ongoing annuity or dividend for years and years to come. That show might run for 5, 10 years, or even more. And that's ideally that's what you hope for, and that's ideally what you want. So the high potential returns and the love of performing arts. So um, I'll just talk about some of the other reasons why it makes sense to invest in Broadway musicals, at least for us, or at least for me, but within Norada Capital. I always ask myself the question: is it a good investment? Does it make sense? I will say that the theatrical productions make up roughly about 5% of the entire fund, our allocated commitments, meaning our financial investments. Only represent a very small portion or percentage of the fund, but it adds not only a bit of diversification, but it adds kind of a fun, sexy, interesting asset class to the mix. The primary one, the main one, is the e-commerce businesses. The second main one is the educational masterminds that I was talking to you about before, and I've mentioned many, many times, that being the Money Is Mastermind and the Level Up Real Estate Mastermind, which is a weekly event online and a quarterly live event each quarter, East and West Coast, which is going on this week in Salt Lake City. We're expecting probably close to 500 people at this one live event. So, and these are all members of the mastermind. So, as I mentioned before, high potential returns, these productions can generate substantial returns on your investment, and that could last for years, sometimes even lasts for decades. As long as we're generating revenue from ticket sales, that will continue to go on for a long period of time. There's also diversified revenue streams available. It's not just the ticket sales, but high demand for popular shows can lead to ongoing sold out performances. And we are actually involved in one of those productions right now called Cabaret. If you watched, actually today's Tuesday, if you watched the Tony Awards on Sunday night, just 2 days ago, you will have seen Cabaret not only had a performance on stage, but Cabaret was mentioned multiple times and was the recipient of multiple Tony nominations. And I believe it won a Tony Award, maybe two. I think it was one. I have to go back and check the list. but you've got sold out performances. You can have premium pricing at that point. There's merchandising, which is another stream of revenue. Shows often will sell T-shirts, posters, memorabilia, coffee mugs, whatever else it may be, and that revenue just adds to the bottom line. A lot of times we'll have a production where you do cast recordings. You'll have the original cast of that production generate an audio CD or some sort of format of music from the show that they perform in a studio, and you can take home with you, just like Cirque du Soleil does. And that's just additional revenue. It's not a big line item, but it's additional revenue. And one revenue source that can be actually pretty lucrative is licensing rights. So if you have a good show, or a show that lends itself well to a touring show where you can go city to city over the course of time, whether it's a year or 2 years or whatnot, you can generate revenue from the rights on that touring production. Also, schools and amateur performances, studios will also pay us a fee to license the rights to do a particular show. And I've seen this with my daughter's studio time and time and time again, where they will have Les or Wicked or whatever it may be as something that they perform, and sometimes perform in public as well. And so there's licensing rights and revenues from that, which is great. Another nice thing I like about productions, theatrical productions, is they can have both brand impact and cultural impact. If you think of shows like Hamilton, The Lion King, Wicked, these original productions transcended Broadway. They've become part of popular culture. And because of that, they have not only enhanced profitability, but it gives them longevity. They could run for years and years and years, for a very, very long time, because they will tour and they will be on Broadway. Sometimes a Broadway show will disappear for a while and then come back. um, as not so much a revival, but just another a reopening, if you will. And of course, you know, if a show is popular enough, it actually has tourism and economic impact. You know, Broadway is a major attraction for tourists in New York City and all around. A lot of locals, regional and otherwise, come to visit the shows and support the shows, but there's a certain percentage of tourists that visit New York and go to the shows because they know of it, they hear of it, or it's something they just have to do because they're there in New York. Then there's the, you know, the critical acclaim and award recognition that comes along with it. Awards like the Tony Awards, stuff like that can really boost a show's profile recognition and attract larger audiences. And that winning, you know, any kind of prestigious reward just helps drive more ticket sales, and it extends the runs if it's a limited run show. We were in one called, actually the poster's right beside me, The Sign in Sidney Brewstein's Window, and it had Oscar Isaac and what's the lady's name? Rachel Brosnahan, the lady who did The Marvelous Miss Maisel. So I think that was a 12-week run. So some shows are actually a limited run, and they'll typically recoup in like 8 weeks, 9 weeks, and then, you know, the remaining 3, 4+ weeks are generally profit. So you can generate 30, 40, 50% returns on that, sometimes more. It just depends. Then, you know, there's always the ancillary markets from a show. You know, you can have a touring company and take a show like A Beautiful Noise, the Neil Diamond musical, which ends on June 30th of this month in New York on Broadway. We're going to be taking that show starting next year on I forgot if it's a 24 city or a 24-month tour across the US. And so it'll be, you know, going to major cities and markets around the country, so you can catch the show in other regions, not just in New York. The shows can play in regional theaters, and that just drives a percentage of revenue back to the parent company where we made the investment. Now, those are playing in regional theaters. And then, of course, like I said before, amateur productions like schools and community theaters will pay for the rights to perform a popular musical, you know, for a very small audience. But, you know, that's just how it works. It's, you know, essentially a licensing thing. But many shows, like I said before, don't recoup their original investment. It's just unfortunate, but it's just the nature of the beast. So success is not guaranteed. They can be fun. They can be profitable. Sometimes they can be very profitable. But if it's something you enjoy and you have a passion for theater, it can make sense for you. If you're investing directly, if you are able to get into a production, you always have to be an accredited investor. And the underwriting that's involved with it is a little bit different. Like I said before, it's not like real estate, but essentially that's, you know, that's what I look at in terms of what I consider important when it comes to theatrical productions and why I invest in theater. So it's the love of the arts, the high potential returns, the fun, the sexy air about it, the cool factor, the fun opening nights, the galas and parties that go along with it, you know, pre and post opening night, all that stuff. Now, as far as shows that Norada Capital's involved in, that are running today, and alive and active, are A Beautiful Noise, the Neil Diamond musical, running until the end of the month. The Notebook, yes, it's that Notebook, based on the book and the movie. Very similar, incredible production, definitely a tearjerker, worth seeing for sure. Cabaret is now back, better than ever, and it's receiving huge recognition. I think that it's going to have a long run and be incredibly profitable for us. If you go back to the analogy I said at the very beginning of this Zoom, remember how I said, like, often 1 out of 10 will be a home run, and it'll be just a very profitable one, and it'll cover the losses on other productions that you get involved in. Not necessarily us, but anybody. Cabaret, I believe, is going to be that home run. And, you know, I obviously would like all of our productions to be home runs and be very profitable. But I really have a strong feeling that Cabaret is going to be that. And then the band The Who has a production. It's not technically the band that has the production. We, as the producers of the show, have the production, but it's called Tommy, and it's The Who's Tommy. It's based on Tommy by the band The Who. And if you watched the Tonys the other night, Pete Townsend was not only on stage talking about it, but he was also playing for a portion of it on stage. And last but not least, we have Gutenberg. Now, to give you an idea of the grosses, the weekly gross revenues that come from this, now this is not profit, but just to give you some perspective. So these productions can generate, these productions can cost, often 12 to 15 million, sometimes 20 to 25 million, depending on the complexity, the scope, the theater, the set design, the type of cast, who's on the cast, and the size of the cast, among other factors. But those are typically the things that contribute a lot to the cost of a production. So generally speaking, they're going to be 15 to $20 million to capitalize. And often it can be as much as 22 to 25 million. Something like The Lion King can be upwards of 45 to 50 million, but that's not the norm. That's more of an anomaly. As far as recoupment period, it varies. It really varies based on the size of the theater, the percentage of occupancy, how many tickets you sell on average per show or over the course of the week, and whatnot. But many productions will recoup anywhere from 40 weeks to a year after the show opens up. Some of them are more aggressive, and you will recoup your capital in a shorter period of time. Other shows might be 5 quarters, like a little over a year to year and a half. It really just depends. There are different variables, but just to give you some perspective, these are grosses, not net. But our show, The Notebook, last week cleared $711,000 in ticket sales. We had an 87% occupancy in the theater overall for the course of that week, and these numbers all come out week by week by week by week. That was over 7,000 ticket sales. So that's The Notebook. The Who's Tommy generated $750,000 last week in revenue, gross revenue. And that wasn't even with full houses. It was just a slower week last week for that particular production. We had about 73% occupancy, but still generated over $750,000. A little over $750,000. I'll just tell you about 2 more. A Beautiful Noise, the Neil Diamond musical at the Broadhurst Theater. Last week, we had a light week, 70% occupancy, but we still generated almost $915,000 in ticket sales. Those are gross sales. We had 6,500 tickets sold. Obviously, we had a lot more capacity there. Anything over that would have been, of course, all profit. But that's Broadway. You can see anything from 60% occupancy or capacity to 100%. And then last but not least, Cabaret, the one I've mentioned a few times right now. Last week we had every seat sold, 100% occupancy. We generated 1.899, just a hair short of $1.9 million in ticket sales last week. This week we're on track for 1.9 million again. We're pretty consistent at selling out and having 100% occupancy in that theater. Actually, it's at the Kit Kat Club. So and they titled it Cabaret at the Kit Kat Club. So those are 4 of our productions that are running right now. And I just want to give you an idea of what the grosses are and, the percent capacity in the theater and how that all works. So it's definitely very interesting, and it is a lot of fun. And like I said before, it's a very small percentage of our fund, but it adds some fun diversification to the assets within our portfolio. So I see there's some questions that have come in. I'm going to get to those here in 1 minute. Let me just quickly tell you, very quickly, what it takes to invest in Norada Capital if it's something you're interested in. It's very simple. We issue promissory notes. It's just nothing more than a loan agreement. Promissory note is anything from a signature loan, a bike loan, a car loan, student loan, anything like that is a promissory note. So promissory note is just an instrument that allows you to make an investment between 2 parties. The investor is the lender. The borrower is whoever it may be. In our case, it's our company, the corporation. We are raising capital through the promissory note, and that allows you to invest and earn 12% or 15% fixed. It's 12% per year, 15% per year. And those are interest payments that are made each month through direct pay. Well, we use Bill.com as our service provider, and that just goes into your account. Now, if you have a self-directed account like an IRA, a Roth, a 401k, or any other type of account in the US that has an account number, we can send that distribution or that interest payment directly to your self-directed retirement account. And really, that's the long and the short of it. So the minimum investment is 50,000. You do need to be an accredited investor. If anybody doesn't know what that is, let me know in the Q&A box, and I'll explain it to you. You can choose the term. This is kind of the last thing I'll mention. You can choose a 3-year note, a 4-year note, a 5-year or 6-year or 7-year note. So you can choose the term of the note, and you get monthly interest payments each and every month over the course of that note that you have with us. And then when the note matures at the end of the term, the principal's returned. If there's a bonus involved, it'll be over the return of that capital plus that bonus amount. And that's pretty much it. If you have any questions about the investment opportunity, just let me know. If it's something you're interested in, I should put it in the chat box as I'm talking, but you can do one of two things. You can go to our website at noradacapital.com. I don't know if that, yeah, that worked. And fill out the little form. But if you want to bypass that and go straight to the profile form, then you can do that as well. It's kind of like a cheat in a way. But I'll put both of those here in the chat box, or not the chat, but what do you call this thing? Slash profile. So that second link I put in there, which is noradacapital.com/profile, takes you straight to the investor profile form. It's a form that takes 2 minutes to fill out. Once it's complete, you'll automatically get a DocuSign with the promissory note and the disclosures all in one little PDF packet. And it's all there for you to review. And if everything is, kosher, just you can go ahead and sign it, and it'll go to my desk. I'll review it, sign it, and then you get a completed copy. And then all you have to do is fund that note, and we'll set you up on Bill.com, and you're ready to go. And you'll be assigned to an investment counselor here as well. So you have someone who's a point of contact you can call, ask questions, get information from, whatever the case is. We also have an investor deck we can send you. Just contact one of my investment counselors for that investor deck. We'll just email you the link, and you'll be good to go. All right, let me get to, there's not very many questions, so let me just attack those real quick. And again, if this is being recorded, if you have a question, drop it in the Q&A. And I think, once we finish going through the questions, I will just do a recap. And then from there, we can just wrap it up today. So, all right, let me get to these questions, and I appreciate you sending them in. Michael, do you also share in the licensing revenue that's generated after the show closes and regional theaters produce the show? The short answer is generally yes. And it is, as long as there's an agreement in place with the regional theater or the touring show, with the parent company that originally launched and opened the show on Broadway or London's West End or wherever it may be, then the answer is yes. There will be a royalty that's paid always back to the parent company, which then is distributed to the investors and co-producers. So yes is the short answer to that. Good question. We're always going to try and get a piece of the revenue anywhere and everywhere we can, because it just adds to the bottom line. It's just more not only more profit, but it's an increased rate of return for all the investors that took the quote unquote risk to get involved in that production. So yeah, but that's basically how it works, Michael. So thank you, and I do appreciate the question. Chris, what are the percentages of the investments that make up Norada Capital Management? For example, Mastermind Percentage, Ecom, Broadway Investments. Okay, real estate. Yes. Okay. Okay. Well, I'll give you that breakdown. I just updated that sheet, interestingly enough. So your timing is good. So the as far as our funded allocations go, the mastermind businesses make up 58% of our investments. So it makes up a significant portion. They are also the unicorns and the cash cows of what we are doing. These are businesses that have high valuations right now. The valuations on those businesses continue to increase and become substantial. Where we see that going over the next 12 to 24 months is also more than pretty exciting. It's very exciting. And so it has become a growing percentage of the pie. Last year was around 55%, late last year. I expect those to grow to approximately 70% of our funded allocations, whatever we've committed and funded to. The second largest piece is the e-commerce. Right now, that represents about 18 to 20% of our portfolio. And the rest of it is fairly, I shouldn't say insignificant, but a very small piece. Like the theatrical productions right now is 7%. What we are classifying as real estate based is 10%. So, but that changes. That can change from quarter to quarter or year to year as we rebalance and either take on more, or in the future, like in the next 2 to 3 years, as we have exits. If our exit involves selling off that equity, then obviously that pie is going to change. That percentage is going to change as far as what we're allocated to. But yeah, that's a good question. So short answer, Chris, the largest piece of the pie at the moment are the educational masterminds, which is essentially Aspire, the Aspire tours, which I talk about frequently, almost on every webinar, and some webinars are completely dedicated to that. Our Aspire tour that we have running every month all around the country, which drives people into our Money Is and Level Up masterminds. Level Up and Money Is masterclasses and masterminds, and that's really where we monetize this. And this year, we're actually putting some strategic plans in place to monetize Aspire. Right now, Aspire is essentially a loss leader. Shouldn't even call it a loss. It's a self-liquidating offer. It's the top of our marketing funnel where we drive people in to our world and our ecosystem to expose them to the education that we have with our mastermind. So the content, which is the education, the community that's there too, which is the membership. And as more and more people find out about it, we bring more and more people in, and that just means more and more revenue because we have more members, and that just increases our profit, which increases our valuation, and it's just a very positive upward spiral. So anyway, that might be a long answer to a short question, but Chris, I appreciate that. Jennifer, so that would only apply to new productions? No, if you're talking about licensing and royalties, that applies to any and all of our productions, because Norada Capital is a co-producer in, meaning an equity holder, but a co-producer in the different productions I was talking about. So being part of that parent company, the theatrical production company, any royalties or licensing rights that apply are paid to that company, and then any distributions that are sent out because of that, those revenues or that profit is sent to all the investors and co-producers, and of course the lead producers that are involved in that production. And that goes on basically forever, in perpetuity. There's no reason why a license would expire. So as long as there's revenue being generated, there's the potential for additional distributions and profit coming into Norada Capital. So Jennifer, I hope that answers the question, but if it didn't, just let me know. Interesting question, Nancy. What is the ultimate goal of the masterminds? To have those people also invest in notes or real estate? Two different questions, two unrelated questions, basically. The ultimate goal of the masterminds is really to grow a like-minded community of people who will grow together, learn together, support each other, build bonds and friendships, as well as potential working business and investment relationships. None of that is forced upon them. It just happens naturally and organically. And that's true for most every mastermind. If you're around like-minded people and there's people that you like, you may do stuff together. You might become friends. You might learn from each other. You might support each other. You might become accountability partners. You'll attend events together. You'll learn and grow personally, financially, in business together. And if you were on the webinar at the very beginning when I was talking about my little story of where I met Ken Davenport, my partner and friend, an associate, who is a lead producer and co-producer on many productions with me. I met him at War Room, a mastermind that I belonged to for many years. I think it was like 8 or 10 years. It doesn't exist anymore. It was closed a little over a year ago. They just decided to stop that and just do some other stuff. The founders, the 4 founders of that mastermind. But that's what came out of that mastermind. Many things came out of that mastermind, many good things, but that was one thing, just being at the right place at the right time, on the right day, at the right table, with the right person, put me down, a path of being able to learn about and participate in theatrical productions, specifically on Broadway. 2 of them are in London. One of them is based in Utah. It's in the Salt Lake region. It's evolving right now. It's growing, if you will, in development, but then it'll ultimately be at a regional theater, and then the goal is to get that over to Broadway or other places as well. But the ultimate goal, to your question about masterminds, is everything I just said: to learn, grow, and network and support like-minded people, and that could be anywhere from 2 to 20 to 200 to 2,000 people. Obviously, you're not going to network and be with 2,000 people at one time, but that could be the size of a membership. But to your second question, to have those people also invest in notes or real estate, we're not pitching them, on the turnkey real estate that we sell, nor are we, pitching them on the investment notes that you have the opportunity to invest in here with 12% or 15% annual returns, with the monthly payments, what I was talking about 10 minutes ago. But they are welcome to, as long as they qualify and we're a fit for them and they're a fit for us, then yes, by all means, come on and join the ride with us. But that's not the mission or goal of the masterminds. That's not it at all. So, all right, Nancy, thank you for the question. Amit. Oh, hey, Amit, how are you? Hello, Marco. Thank you for putting this together. You may have gone over some of this. However, can you name a few specific criteria you use to evaluate Broadway investment opportunities? Yes, I'll give you a high level 30,000 foot answer. One, I look at who's behind it in terms of the lead producer or lead producers, what other productions they've been on and their success. So it's like betting on the jockey, not the horse at a horse race. You're really considering the jockey and who's driving that, who's the lead producer, the contacts they have, and the people that they're able to bring in terms of script writing, choreography, set design, all that kind of stuff. I mean, this community of people that I've met, and you just know the people who've really done very well and have a good track record. So it's the people. Second is the capitalization on it. How much does it cost to produce it? And what are the running costs, the weekly and monthly costs to keep that operating, that production operating? Thirdly, what are the expected revenues? And of course, those are always broken down by capacity, theater capacity. Often they'll do like 60, 70%, 80%, 85%, 90, and 100% capacity. And you can see what the numbers look like on basically a pro forma or a spreadsheet. And then you can just, from there, you can look at another metric, and that is how many weeks, usually it's measured in weeks, not months, but how many weeks until you recoup your original investment. Ideally, I like to see something that's under 12 months, like less than a year. Sometimes you find them, sometimes you see them, sometimes you don't. You need to be a little bit conservative in your, your forecasting and your predictions and projections and assumptions. But if you can recoup within a year or in a year, that's actually good. If you can forecast that conservatively, that's very good. If you do it in shorter period of time, even better. But ideally, you'd like to have a production that doesn't have crazy high operating costs and has a recoupment schedule of under a year. So I don't, hopefully that answers your question. I mean, okay, a couple more and then we might wrap it up. Nancy, what shows of yours are running in London? Going there end of summer. Maybe I can go to one of them while there. You might be really good on timing because I believe it's July. I forgot the exact date, but we have The Devil Wears Prada. There's only 3 co-producers on that, and I happen to be one of them. The Devil Wears Prada opens on the West End in London, I believe, second half of July. I have to check that. I will be there for the opening, of course. And yeah, Nancy, let me know if you're going to be there. We could definitely meet and go to opening night together if I can get you tickets. I shouldn't have said that actually, because it's very difficult to get opening night tickets. Usually they're reserved 2 per each person involved in that production. So it doesn't take very long to fill a theater. Anyway, I intend to be there, so maybe I'll see you. But there's actually another one running right now on the West End. It's Sister Act, actually based on the movie. If you remember Sister Act, the story in Sister Act, the movie. Who was that? Whoopi Goldberg. So that's actually running right now, and we're getting a lot of press and media attention. So I expect Sister Act to do very well because of all the reviews and the commentary coming back. So that's running in. Yeah, that's running on the West End, if I'm not mistaken, too. So Nancy, yeah, thank you. There might be another one I'm forgetting, so I have to go back and check my notes. All right, Nancy, thank you. Oh, Nancy, I'll be there 7:31 and 8/7, but thanks. I plan to go see a show and I'll go to one of them. Okay, awesome, Nancy. Thank you. Just do a quick Google search. You can actually look up the websites are up. They'll have announcements and dates for. And keep something else in mind with Broadway productions, most all theatrical productions, there's something called advances. They will sell tickets always in advance and pre-sell tickets to future dates. So that way there's always a stream of people coming in. They don't have to just wait till the last minute. That would be silly. So just check the website. Yeah. Arthur, interesting question. I know I talk about this, I think, on every single webinar. What would happen to revenue in the event of another COVID-19? Well, first of all, let's hope that there's no COVID-19 or you're welcome. I mean, there's no COVID-19 or black swan event or anything like that. That would certainly be hurtful to industries and the economy. Now, granted, some industries did very well during COVID, like e-commerce exploded. It's always been growing year after year, but it did extremely well during COVID because stores and retail operations were closed and people were shopping and ordering more and more stuff online just because it was COVID. Things were closed or people didn't want to go out. So yeah, during COVID, it really had a huge impact on Broadway and actually movie theaters and all theatrical productions all over the country. It wasn't just Broadway. But yeah, something like that would be not so good. It would be hurtful because the theaters would have to close for a period of time, just like they did, during COVID. And that just means lost revenue. Like everything just comes to a screeching halt and you just have no choice. You just have to shut down and suck it up. Now, granted, some operating costs go away, but you have certain fixed costs that don't go away. So you still have operating expenses to keep, those productions not running, but available. So anyway, let's just hope we don't see another COVID or anything like that, because yes, that would be hurtful. So yeah, The last thing I want to see are things like black swan events and the unknown unknowns. That's kind of the thing that keeps me up at night. Okay, this might be the last question here. Oh, multiple questions. Chris, so okay, Chris, when will you be sending out Norada Capital financials to your investors? I emailed Michael last Friday. I think Michael emailed me this morning, just asked me. So your timing is good. We just updated in a more pretty format than just like a QuickBooks report, which is like, I don't even like the format that QuickBooks uses anyway. But we just finished the June version of the summary balance sheet, and that's available. I think I sent it to everybody last night. It's done. It's available. I'll send that to Michael here today, so you can get that from him. The the cash flow pro forma is also done, but I'm waiting for two things from my bookkeeper, Sean, that I asked him for last week, and he wasn't able to get it to me. He was traveling. He was out to New York. And I pinged them again today for it. So I should have that by the end of today. Once I have those numbers, I can plug them in to our cash flow pro forma, which lays everything out. Actually goes out to 2040, but really you're only going to see up to 2030. And that will be put out into a PDF format, and it's essentially ready to go. So I will send that to Michael. Let's call it tomorrow, just to buy myself a little bit of time. So by tomorrow, for tomorrow, you should be able to get both from Michael. So, and if you don't get it from Michael, let me know, but he'll definitely have it. So that's it. All right. Maybe I'll take one more because Sonia just popped up here. Hi, Marco. I'm looking to get another promissory note made soon. Can you tell me what would happen if you ended up selling Norada Capital Management? I have zero intention of selling Norada Capital. We have too many good things going on, a lot of growth in our companies that are in the portfolio. However, I will tell you this, hopefully it's not letting a cat out of the bag, but this is definitely not something that is available today, and it may never be available. I had a meeting this morning with my team, and we always kick ideas around. One of the ideas we were kicking around is setting up a separate offering tied to Norada Capital that is not debt-based, meaning a promissory note with a fixed rate of return like an annuity, but actually issuing equity. In other words, buying units, shares, essentially, but units in Norada Capital. Are we going to do that? Don't know. If we do that, when would we do that? That I don't know either. Could it be in 2 months from now? Maybe. A month from now? Maybe. 6 months from now? Maybe. Never? Maybe. It's just an idea that we're kicking around, but I have had conversations about it. And the reason I've had conversations about it is because I've had a number of investors actually ask me, can they invest in Norada Capital as a unit holder, like a shareholder, and have a piece of equity versus a promissory note with a great yield, but for a fixed period of time. And I always said it's just not an offering that we offer, but it is an idea that we have been kicking around, and if it makes sense, then you'll hear about it in an email. You'll hear about it on the webinar. We'll definitely start talking about it. I know that's a long answer to your question, Sonia. But I guess we can just keep you posted. But in the meantime, if you're looking to get another promissory note, just contact your investment counselor. If you have an investment counselor, if you don't, just let me know, and I'll make sure you're talking to the right person, or just get in touch with Kathy. Kathy Laubach is our operations manager. She's the one who actually creates those. So yeah, just let us know and we'll give you a hand. But if you have any other questions, let us know. Okay, Sonia, thank you. And then let's see. David, I think this is unrelated. We don't really fund real estate developments and whatnot, so can't really help you with that. But your 27 unit in Decatur, good luck with that. It sounds like something I was looking at a long time ago, actually. No, we don't want to get involved in real estate. We have a very small real estate component within our portfolio, makes up less than 3%. So it's a very small percentage. Actually, I should take that back. If you look at all the real estate related investments, it makes up about 6 to 10%. It's not real estate necessarily. It's a land development company to some degree, but still real estate related. But anyway, we don't lend and we don't fund real estate projects. Sorry. Okay. Anyway, I put the links in the show or in the webinar notes. So noradacapital.com for more information and to get investor deck, and you can fill out the form. If you want to fill out the profile form to get the promissory note because you're interested in investing, it's really the same website, noradacapital.com/profile. It's in the chat box, but at least I said it, and the recording of this will go out soon. Okay, everybody, it's the top of the hour. I appreciate you taking an hour of your time. Thank you very much. You've been generous with your time, and I love talking about this stuff. So thank you and have a great week. We'll see you next week.